All right, we're live. Good day, everyone. Shane Ockley here from Rogue Trader Academy with Deribit live, as always, with my partner Richard Hodges on this lovely Thursday, November 9th, as we're watching Bitcoin push up and up and up. And I know all you hodlers out there are excited. I know. It's been a while. It's been a while since we've gotten some action. It's good stuff. Please just let me know if you can hear me. I assume you can. I can see people, nobody's saying, hey, what's going on? So I assume you can hear me. Cedar, Def, Lejeune, good to see everyone. Dom, great to see you. Great. We've got some good things to talk about today. A lot of interesting stuff. I was just commenting to Richard before we started that when the market moves around, there's lots to talk about. And it's really, really true. We've got some sizable moves. I mean, last week we had a great move up. Or was it 2 weeks ago now? It's all kind of a blur, that big 12% candle. That was back on the 23rd, I think. The October. Yeah. Monday the 23rd was the day that moved up. So we're just going to wait for some more people to roll in. If you do have, and of course, Stanislav always gets the questions in early. Yeah, you got jump to the front of the queue, right?
And the nice, easy questions to answer as well, which is, how do I do this options trading stuff?
Thanks so much for that. But you know what they say, right? The closed mouth doesn't get fed, right? So
that's true.
You got to jump in there.
Well, the answer there is that we run a course on it, because it's not something we could probably answer in a 20-second answer. But in summary, that you can use options to hedge options, and you can use futures to hedge options.
All right. And Richard he just wants to answer questions all the time. He'll get ahead of ourselves. We've got a program here, you know.
Yeah, sure. Sorry.
Yeah, we've got a format. It's showbiz. Well, kind of. You can tell we're real experienced, right? All right. So first things first. We still got some people coming in, so let's just give it a few more minutes here before we jump in. But what I'll do is let me lay out the show today and what we got going on. So we're going to, as always, we've got a couple of extra things to talk about, but market analysis, we'll look at some charts, review current strategies, and the core of what we're going to talk about a little bit later on, and Richard's going to really dive into this, is how to make the systematic platforms, risk proof. I'm going to put that in air quotes here, risk proof, because, sometimes it's hard to be completely risk proof, but because Richard is a systematic trader, so he's the perfect one to talk about that stuff. But before we get started, as always, you can always check us out if you want to trade along with us, roguetrader.academy. Go to the option trading courses, and any package silver and above, what you get is not only access to the courses, but our interactive Telegram channel where we chat back and forth all day. We post our trades in there. We do a weekly Ask Me Anything call on Monday, and we've just started something really, really cool. Actually, Richard, if you could share your screen. What we started doing was we teamed up with Zigdao, Zigdao. They used to be called Zignally, and we trade on Deribit through their platform. And they're a really cool platform. We know the owner, and it's basically a place where you can back traders. If someone's a really good trader, you can give them $1 or $100 or $1,000, whatever. So we opened up an account there. We put in 5,000 USDC because that was sort of the average retail trade. No, we're not looking for people to fund us. That's not the point. The point of what we're trying to do here is we've funded this account, and we're just using it as a teaching tool. So every day, Rich and I just chat as we're making decisions about what we should do and going through all our different tools we have, and then we're making our trades on Deribit using this Zigdao outlet or portal, I guess is what I should call it. So it's a really cool, unique learning tool. We make a video every day, sometimes not on the weekends. Sometimes we'll make 2 or 3 videos a day, depending if the market's going crazy. And anytime we're going to make an adjustment to our trade in there, we record it. We record our process and our thought process, and we make the trade. And I thought that would be a much more comprehensive and a better way to give to the people who want to learn versus trying to talk once a week and just give a little snippet into what we might do, depending on what the market might do, because you never really know until it happens. You need to see the metrics in your account change. You need to see all that stuff to really put it together, keep margin under control, yada, yada, yada. So that's what we're doing over there. The one last thing I'll mention, actually, and Richard, I'll take over here. I'm just going to screen share this because I want to show everyone this in case you don't know. And I put it in the chat too. We've got a link to our team, but Deribit has done this really cool thing with Signal Plus. I mentioned it last week as well. We've got this trading competition. Now you can register as an individual, go in there, register. That's cool. You can join a team. And of course, if you join a team, you're going to join the Rogue Traders, right? Of course.
Of course they are, yeah.
Even if you don't, look, they got all kinds of cool stuff. They got a lottery every day. They got a bit of a prize pool. They're giving out random lottery gifts every day. So it's not like you have to be the best trader in the world. They trade the highest volume. You can still win something every day. Here's the rankings. Here's all, you can go through and read all this stuff on how much they're giving away in total. Lots and lots and lots of great stuff there. So lots of, Ben, Deribit's really on the warpath. They're doing all kinds of great stuff. I mean, we use them for all of our trading. So it's really nice to see it. It's nice to see the volumes come back in. It's nice to see the volatility come back in, and trading has become interesting again. And a little bit, it's like sometimes it's like walking through a minefield. You got to watch where you're stepping. And that's the way trading normally is. We got used to the summer doldrums where nothing was happening. So.
Yeah.
All right. So what we're going to do right now is I'm just going to share my charts. We're going to run through some charts. Oh, the other thing I forgot to mention too, if you sign up with Rogue Traders, silver and above members, we're also getting our people signed up as beta testers with Immersive Finance. And they've got this really cool suite of tools that can help make decisions. So I didn't want to forget to leave that out because they've been a big help to us in doing our research on helping us make trades. Anyways, where's my...
This is some of Immersive Finance's tooling. There's also, they're bringing out very soon a complete risk dashboard, which allows you to break down your risk in a very professional way.
Cool.
I find it a very essential tool. And also they have a Python interface, so you can actually do your own Jupyter notebooks and Python scripts and whatnot to manipulate risk any way you want.
Cool. So between Signal Plus and Immersive Finance, man, Deribit's got you covered. All right, so cool. Let's start on the charts. Look at this, just as we're talking. So often when we go onto Deribit Live, it's like the perfect time and the market starts to move. And I suspect that's because it's the U.S. Open or close to that time. So, the U.S. wakes up and things are going. Now, we see Bitcoin pushing up here. It's, we're pushing up recent highs. We're just over 37,000 now. And you can see this line. I just want to make it so it's clear. This line I drew long time ago. We kind of got into a sideways channel for a while. We said, well, we could get in a sideways channel, but we hit that trend line, something's going to happen. Well, what happened? Well, if I expand it out a bit here, we hit the trend line and we kind of farted through. We kind of came down. It was a little bit of a non-event. We pushed back up hard and we wicked above it hard, but right back down underneath it, but it didn't fall. So at first I was thinking, it got rejected off that trend line. Maybe we're going to come back down into the channel. I'm not saying we're going down, but we'll come back into the channel.
Hang on, Shane. Dev is saying nothing is showing on your screen, but I can see it.
Oh, Dev.
Can everybody else see it?
Yeah.
Can someone just type in yes or no in the channel? Loading. Do you want to just unshare it and reshare it maybe?
Yeah. Are you still have your screen share on? Maybe that's why.
No, I turned my screen share off.
Okay, let me try it again. Boy, we're a couple of... How about that? Can you see that?
No, blank screen. That's strange. Well, I see it perfectly well.
We've had this once before, Richard, when we were going screen sharing back and forth, and it screwed up.
It's all working now.
You can see it now?
Great, yep.
Oh, great.
Thanks, guys.
Yeah, because if I log out and come back in, sometimes it ends a call and it's all kinds of stuff. Anyways, the point is, what I was trying to say was we had this, it was going sideways. We knew from the channel it was going to hit this trend line. But we didn't know what was going to happen. We knew there was going to be some action at the trend line. Sure enough, it goes to the trend line. It comes down and it gets a huge candle up, and it wicked right through. But it rejected right away. But it didn't reject hard. It didn't get pushed way down the channel. It just came lightly down off, and it kind of held. Oh boy. And what do we have now? Burst up above it. This is about as bullish as it gets to me. I think we're just going to keep continuing up, and I think we're going to keep continuing up until we get to here. You know, the 41 to 44s, a lot of resistance there. It was a lot of previous bottoms and previous highs. So I don't want to do a lot of trading in this area right here because it's a little bit vacuous, and typically prices will move quickly through it. No, it might not. No, it might not. I'd rather if I'm sitting on my hands and I don't have any positions on, I'd rather see if this darn thing can rip up to 40 or 41 and then sell that crap out of 44, 45, 46,000 calls, because the premiums will be pumped through the roof, right? And those will be 10, 15, 20 delta, whatever you're comfortable with selling. You get some great value for them, and you've got the safety of this buffer in front of you, right? So that's what I love to do. And when I say sell calls, I'm usually typically referring to selling a call spread, so you have limited risk. Don't expose yourself to unlimited risk if you're new at trading. And that's what I think on Bitcoin. And we can see it's really, let's just push up another $300 since we started the call. Today I made this little line here on ETH. I didn't have a trend line on there before because it was a little bit lost in space. Its big brother Bitcoin was just kind of pulling along by the hand. It still is. We've barely broken above its recent highs, so it's still reluctant, but it's going to go. If Bitcoin goes, this thing's going to keep following it. It just might not, be as neat and nice. So I drew that little trend line 15 minutes ago on the bottom here. So that's kind of where we're sitting at now with these trades. Richard, as we're looking at this Bitcoin pumping up, what are you seeing? I'll turn this off. What are you seeing in terms of IV right now?
Sure. Let's share that entire screen.
And don't just Deribit just went down. What?
Well, it went down and then reset back again.
Okay.
It's probably the sound of 1,000 people logging on in terror.
Yeah.
Yeah. So the Deribit sort of standard volatility measure is devol. This mixed vol measure, currently at its kind of highs of recent times, and actually at its highs for how long is that? 6 months. And that was the March sell-off when everyone was terrified. So actually, this is the most fear we've seen in the markets all year, really. And very interesting to me that we're not seeing vol sell-off again after a rally. That happened. This is like a sustained, almost month-long now, barrage of vol, which of course has put all kinds of short vol books under pressure, and tested the metal and the heart of errors of vol sellers, and of course probably loads of liquidations as well. And then in terms of looking at that in terms of immersives, what's interesting to me is to look at the difference between the 10 delta calls and the 10 delta puts, and the 25 delta calls and the 25 delta puts. This is called the risk reversal, so we can view the vol surface in terms of risk reversals. And if we're looking at these risk reversal numbers of bigger than 10%, this means that the 10 delta calls at 1 month are 16% higher than the 10 delta calls, 10 delta puts at 1 month in terms of volatility, implied volatility. That's pretty high. I mean, I'm used to seeing sort of 5 or 8% plus or minus, but 16 is super strong. It kind of implies to me that there's a lot of forced buying going on of calls right now, and not so much of puts. The monies, if I took these in terms of, we've actually got at the 25 delta puts trading at lower vol than the at the monies. This is the at the money vol, and the 25 delta puts is trading lower, and the 10 delta puts are trading at the same vol as at the money. this kind of tells me that there's a lot of value in risk reversals right now. So literally buying the future and selling a risk reversal. A risk reversal is selling the call and buying the put. Quite a lot of excess value in that. If you're happy to sit and delta hedge it, I think there's value there myself. This feels like a market that's kind of under stress and therefore probably full of opportunity.
Mm-hmm.
Yeah, it's certainly times are getting interesting again.
Yeah, it certainly is. And I think a lot of people felt this move coming. We knew there was going to be bullish pressure. We'd had this, the fake news about the ETF, and then the news, we had some news last night too. So we're kind of feeling that it's going to keep pushing up. But there's also the probability that some institutions are selling into this.
Because we've been reading, haven't we, that volumes are low compared to the past when we were having these kind of moves.
Yeah. So is a lot of retail on board? Hard to say, maybe not. And we were chatting the other day on our Road Trader videos, and we're saying, well, look, Wall Street guys aren't generally stupid, and this ETF thing is not some wild card unknown. So is it buy the rumor, sell the news, or is it really buy the news this time? Because there really will be an influx of U.S. or otherwise prohibited investors. Who knows? It's a little bit tough to tell in some ways.
I think it's very easy to tell because I'm a bear. So if I say, you know what, this is real, buy it, then you absolutely know it's time to sell it.
All right. Okay. So the question that we had today, or the sort of the topic is basically if you're systematic trading, which is what you're doing, where you've got a system, you're just doing this day in, day out, whatever those parameters happen to be. So often you'll get people who try and do that, but one wick or one, 3-4 standard deviation move blows them out, and they lose all they've made in the last 6 months or a year or whatever. And so it's important, especially in crypto, and it's important in any market, to protect yourself because events can happen, and they will happen. Whether they're once every generation or once every year on average, it's statistically it's going to happen. What can we do to protect ourselves, and what do you do to protect your book from those wicks?
Yeah, I'm just trying to figure out how best to visualize this actually. But let's go back to our ZigDAO book, which is a very nascent book, by the way. So we're not preparing for any positions in it. So here's a couple of positions in this.
Oh. Can you guys hear me? Hang on. We lost Richard's sound. Richard, can you log out and come back on? Thank you. Yeah, that's strange. That's strange. You lost him, so he'll just log out and come back on. But I'm the host, so if I stay on, the call won't drop. So we'll just wait for him to come back on. All right, here we go. I'm still keeping my eye on that Bitcoin right over there too, as it's creeping its way up.
Am I back?
Oh, you're back. Okay, I don't know what happened.
Yeah, there's something about screen sharey type switchy stuff that doesn't work.
Yeah, sometimes it's we've had that before a month or two back. It happened. Anyways,
and you can still hear me, right?
Yeah.
Okay, so as I was saying to myself, this is our ZigDAO book, which is a fairly nascent book. There's only a few positions in it, and it's started with a very small amount of money. So we have to be really careful what positions we run on it because Deribit Bitcoin options 0.1 minimum size. that now represents $3,000 or $3,500 of premium per trade. So we're not screwing around here. That's like half the notional of our entire book per trade. So it's serious. We need to make decisions quite carefully. So we got these calls. Most of this we sold before the latest rally, the past 24 hours. Although some of it we've moved around as a result. And in fact, we did roll some stuff forward, didn't we? A little bit. And we've added some more risk here. And so, and actually, here's an example of a risk reversal trade that I've made today. We actually just agreed on this morning to see if we could capture some of this skew in the market. One thing I do. So what I wanted to say is that when you get a move like this, if you're short vol, you are going to definitely take a hit in your P&L. That's not the important issue. The important issue is preserving your intrinsic value, because if you can keep on preserving the intrinsic value, keep the margin under control, then eventually the vol squeeze that you're able will go away, and vols will come down, and you'll capitalize and you'll realize. And if realized vols come down, then all the positions you've rolled and built up, they will then just evaporate and leave you with profit. However, you have to survive until that moment. And I think the mistake a lot of people make is that, first of all, it gets very terrifying because you see big drawdowns, and that can cause people to just, if you associate yourself with the money too much, and what I mean is if the money means anything to you, you'll feel emotional about it, and you'll feel fear, and fear is stronger than greed in all situations where there's a clear and present danger. If you mentally associate losing money with danger, you will feel that primeval fear, and you will close out positions that you shouldn't close out, and you'll do things you shouldn't do. So if you're short vol and vol goes up, there is nothing you can do. Your P&L will go down. You just have to accept that and live with it. And this is the devol chart. Right? So we've seen vol go from devol come from sort of 34 all the way up to now 60, almost 64. It's doubled. Right? Mm-hmm. So short vol positions are going to be underwater. The trick here is using, of course, buying futures or selling futures to manage delta. And also using covering trades and tail risk trades to not so much manage the maximum P&L, because they won't actually generally help that much. But what they do help with is the margin. The margin engine is absolutely your lifeblood on a platform like Deribit. And I would recommend that if you obviously always trade with portfolio margin on, and now and again, click this button. First of all, if you hover over it, it tells you where your maximum risk is. It's saying on the risk shock matrix, my maximum risk is 20% vol up, and then 20% price up, and 30% vol down is our biggest risk. And then on this matrix, if you press this PM button, it calls up this matrix, and you can actually see each position and how they're contributing and how much of the margin they're going to consume as they move. So this is the spot shock, spot higher, spot lower, and then the up and down arrows represent the vol shock. And currently Deribit's operating a 60% up vol shock and a 30% down vol shock. These are quite aggressive shocks that Deribit are applying to your book, and it feels a bit constraining in super high vol situations like this, where you want to take advantage of massive vol. But at the same time, Deribit are doing this to make sure that you stay alive and they stay alive, and you don't end up becoming their creditor and so on. So they want to make sure that you can always pay your bills. So you're forced to always trade in a way that's where you're not going to lose more money than you've got. So how do we use this? So if you think about this, Deribit are let's just talk about the spot shock for the moment. They're applying a 20% spot shock. So they're saying, what happens if spot goes up by 4%, 8%, 12%, 16%, and 20%, and also down? what's going to happen to the value of your book if that happens. And they build this table, and they show you each position of how it's going to, how its P&L is going to be affected, and that P&L is in Bitcoin, and that gets taken off your equity value here. So, what we want to do is avoid being forced to sell positions that we don't want to sell. Sorry, I beg your pardon, close positions we don't want to close. What do I mean by that? Well, for example, let's go back to here, this 1st of December. This is going to be a big corporate print. So I think we sold this today. Was it today or yesterday? Might have been yesterday. It's something we're regretting doing, but so be it. The price of this option, this 43,000 call on the 1st of December.
I think we sold it this morning.
Must have, because the contract only came online today, didn't it?
Yeah.
Don't even know what I'm doing. Okay, so the price is 238 basis points, so about $950 to $30. Right? And if you think about the volatility shock, if we apply a 60% vol shock to this, then we'd be taking this implied volatility from 68 up to 130. 130 vol is about the highest I've ever seen on Deribit ever. So we're pricing in like the FTX drop, the end of 2021, and the Terra Luna on that vol surface, which is a rare event, and I'm fairly certain that we're not going to see that at the moment because FTX and Luna are gone. Although if there is danger that FTX might come back, I just read today.
Under new management, they said.
Under new management, right? So what can we do here? Well, look, this option is at 13% up, and that's when it becomes really dangerous, right? And our spot shock is shocking the market up 20%. So the spot shock is looking at what happens to this option price if we're at 46k. So is there something we can do to make the margin engine less fearful of our position? Because if the margin engine is less fearful of our position, it's going to be less inclined to force us to buy it back if the market does get up here. And if we did nothing and the market got up to here, absolutely we'd run margin call, and absolutely this position would be liquidated because it would be identified as the worst offender. And the way we've done this is that we're looking at the theta here. We're making $50 a day in theta, and we've made the decision: why don't we spend 10% of our theta on some tail risk? And so what we've actually done is gone down here to the 11th of November, which is Saturday. And we found this option here, which at the time was a little bit cheaper. Wasn't too far. What did I pay for it? Hang on. I paid 25. Okay, that's about the same price, more or less. So we found it at 0.25, 25 basis points. So, and we said, you know what? Actually, we said let's spend 10% of our theta on this option. And bear in mind, this option is 9% above the money. So if you think about this in terms of a vol shock now, this option cost us $2.50. What it was, I think it was. $100. No, sorry, $10 cost us for 2 days worth of protection. If we get a shock, bear in mind that the spot shock component of the margin engine shocks you through 20%. So if we're at maximum shock, then this option will be priced as if it's in the money by $5,000, which rather neatly interposes it well before the 43,000 of this one. So what if we get a move up all the way from 41,000 up to 43,000? We're actually in the money on that call, and that reduces effectively. You can think of it almost as turning this into a call spread in that scenario. I mean, forget for a moment that it's a diagonal, but the point is that the actual physical payoff from the cover will go a long way to paying for the increase in price of this call, and as a result, the margin engine it becomes a lot kinder to us. And we actually saw like a 10% reduction in margin use. And that 10% reduction is useful because it means we now have breathing space to move positions around. We can take a position, move it to a 1 by 2, 1 by 3, so move it up the strikes. We can move it out back wherever we want. And so we have protected ourselves, not necessarily by protecting the P&L in a massive way. We're doing that in our futures, and we also have a risk control view of how much risk we can put on. But we're making sure we have plenty of margin. And that's the way to ensure that you survive the bad times. Because if you can survive the bad times without running out of margin, without getting liquidated, all the premium in this option will come out and get given back to us. I think we're sitting on, if I look at the risk screen here, I think we're looking at intrinsic. So we started this book with $5,000. The intrinsic value is now $5,329, and there's $600 of time value. So it's 10% of the book's value is waiting to be given to us, and none of our positions are in the money, and the margin isn't under pressure. So when hedging into dollars, 45% margin use on Deribit.
And we started what, on the 2nd of November, or it was sometime last week we started, or the first. I can't remember. It was first or second. Yeah.
So this, from our point of view, this book is very comfortable, even though we've been through a huge move in the market, and we appear to be still going through that move. The first here, moving around like a crazy thing, isn't it?
It is, yeah. And it just poked up above 37.6, pull back down through Bitcoin. Wow. So as you were chatting, so great. Thanks, Richard. And of course, if you have any questions, please drop them into the Q&A section of the chat. We can stick around for a few minutes. We've gone over time, but we'll stick around and answer some questions. Stan does have a question for me. I have a risk control question. I remember Shane mentioned once that he buys back sold options if it hits 50% ROI, negative P&L. Just manually or automatically, can you recommend any tool helping that? Well, actually, I don't do that, Stan. What I said was, I will, if I buy an option and it loses 50% of the value, I'll sell it. So I do that when I'm scalping, like if I'm looking to buy a near-term expiry option and high gamma trades. Looking for example, let's just say right now, Bitcoin had a huge candle, just went up to 38,500. And it just kind of stopped there. I might quickly buy a put, thinking that it's going to retrace some of that candle for a little scalp. That's where I'll do that. And if I pay $50 for that, if it keeps going against me, now it's only worth $25, I'll just sell it and get out. That's how I do that. When it comes to selling options, everybody's kind of got their own strategies. It depends if it's a covered call, if it's an iron condor. Some people might take it off when it gets 25% of the value of the premium is lower. So you collect 25% of that premium. They might close the whole thing, or they might close a portion of it, see if the rest can ride, and they can get 50% or 75%. Sometimes, Richard takes most of his things to expiry all the time, but he's doing a different type of trading where he's capturing the difference between the realized and the implied volatility. So it really depends on the type of trading you're doing if you're selling vol. And you know what? You never go broke taking a profit. If you're just doing one strategy at a time and you're selling call spreads, for example, right now, and you're in the money, I've got no problem taking profit off the table, and I always love to scale out, and I love scaling in, because Murphy's Law is always at work. Because if you take it all off the table, the thing's going to keep running for you and be like, oh, man, why did I leave it on? I'm so stupid. But if you don't take it off, boom, it's going to go against you. Think, why didn't I do that? You can't win, right? And as Richard says, trading is always a series of regrets. So scale out. And then if it's going for you, hey, some of it's going to ride for a long way. Fantastic, wonderful. But you never go broke taking a profit, right? It's one of the old proverbs of trading. And I can see Bitcoin now above 37,600 again. So quite interesting.
It's one of the hardest things to do, right? It's one of the things that's the hardest thing to do is to take action that's in your own interest. It's surprising that human beings have got as far as they've got. with our ability to sit there and just get run over by a steamroller, right? And so sitting on a position hoping it's just going to keep on going higher is one thing. Being terrified of being in the market, so getting all out, so it's a guaranteed way to make no money. And if you're short the market or short options, being too slow to say, okay, you know what, I may be doing the wrong thing, but I cannot afford the risk of this going too far, so I will adjust it. And doing that, the earlier you do that, the better.
Yeah, fantastic. Well, if we don't have any more questions today, we'll wind it down. We are a little bit over time. Lots of great trading apps. I actually can see it's moved up about another $80 since we've been talking. Again, check out the Signal Plus Deribit trading competition. If you go into the chat, I have it pinned at the top. If you want to join the Rogue Trader team and be cool. If you don't want to be cool, join some other team. That's fine. And as always, if you want to trade along with us, head over to roguetrader.academy. Sign up for anything silver and above, and you can chat with us all day long while I make corny jokes on Telegram. And join our weekly Ask Me Anything call. So it's great. It's a wonderful resource for all our members. I've got one more thing here. Dom. Yep. Thanks, Dom, for being here. Thank you, everyone, for joining us. And we're going to see you next week.
Okay. Bye.